All right, recording's rolling. Appreciate everybody who's here again. Those of you who are waited patiently today on normal Tuesdays. Today is the 18th of October 2022. But anyways, on Tuesdays, we normally look for our sentiments for the week for our streams as far as what we are looking at from an institutional perspective. We're going to talk about a few different pairs. I'm personally looking at ETH, I'm looking at US 30, and I'm looking at XAU. XAU has been one of my main focuses. We've been talking about this for a lot of past streams. One of my favorite pairs. Just love the manipulation, love how she shows her hand in the market, but we're going to talk about some most recent price action from ETH. We can look at Bitcoin as well. But as you know, when we're looking at ETH and Bitcoin, they usually show that same type of narrative. And what's up, brother? What's up, Dojang? Appreciate it, brother. We'll get this started. We're going to go ahead and take a look at a few different pairs here. But we're going to go ahead and talk about behavior. We've been talking about the behavior coming into these areas, into these zones, what quote unquote retail, right? The uninformed money could be thinking. So we can look to target that, right? The opposite of that, whether they're looking at this from a support and resistance type mindset, right? From those eyes, or they're looking at it from breakouts, however they're trying to trade. We understand that those type of strategies or those ways of looking at the market to where it just seems a little bit too simple can be very manipulated, as the 90% is looking for the shortcut, right? They're always looking for that shortcut, which leads them to those failures that you aren't going to look for and you don't want as an institutional trader or somebody who considers themselves a professional trader, someone who wants to make money long term consistently, right? So we're going to go ahead and talk about the behavior coming into these zones, what I'm expecting, what we were looking at with this most recent price action on the hourly time frame and below. And then after we are done with that, then we will get into either XAU or US 30, whichever one I decide to look at first. But we're going to go ahead and start with ETH, and we'll probably look at Bitcoin next. So as you guys know, we've been looking for delivery into this 2-day fair value gap. We're going to go ahead and get back on the 2-day, show you what that looks like. We saw price come up into this area of supply, show that move to the downside, come up into that area of imbalance, and then make another move to the downside. Back into that area of discount, we're looking for that 2-day imbalance to fill that area, mitigate more of this institutional candle that we are looking at right here, right? That last sell before the buy move to the upside, the breaks of structure to the upside with impulse, leaving those imbalances behind. Imbalances, right? Those areas where price moved so quickly that there was an area or enough time and spread was too high for orders to be filled. So we have unfilled orders within these areas. Once price draws back into those areas of discount, we're looking for price to mitigate those areas and then show the same type of behavior we saw here within these areas as well after we come into there and break structure to the upside. Remember, we were looking for that liquidity rate to the downside, and then price break structure to the upside with impulse, exactly what we are talking about right here. And then it makes the move down, and then another break of structure to the upside, then confirming that higher low, and then we can look for that continuation to the upside into this possible weak high right here, as well as this liquidity that we can see, the supply side liquidity for a possible return to supply that caused this breakdown right here. We must understand overall on our weekly time frame we are still bearish. On our monthly time frame we are still bearish as well. This low is possible to be taken. We can't bank everything on this 2-day zone that we have right here, but we must understand the behavior coming into these areas as well, something that was very important to me over we're just going to continue to the downside type of theory. And the reasoning I say this is because we're holding discount on the second half of this move to the downside right here, meaning we could see a definite possible distribution move to the downside right here after we came up into that area of supply that we had talked about, and then a move to the downside, we had our accumulation to then distribution, following our distribution, so our redistribution into our area of discount. And then if we show that accumulation behavior, so we then have an accumulation, then we have a distribution to accumulation, which makes a reaccumulation. So we can see how lower time frame moves as well, like this move to the downside that we saw right here, which was that lower time frame redistribution. Obviously this is a 2-day chart, so it might have been a 4-hour redistribution, but price had that distribution to the downside, and that redistribution is just part of an overall reaccumulation if that shows its hand. From the behavior that we were talking about right here with these equal highs that we can see, if we maintain those equal highs and we make a move to the downside into these equal lows, take out the quote-unquote early longs who are trying to take limit orders off of these zones right here. Maybe they thought this was a support zone, whatever they had, right? Maybe the top of this zone right here, they called it a flip zone. We don't know what they were looking at, but maybe they're trying to look to continue to buy this to the upside right here, which we can see some equal lows starting to form, some relatively equal lows starting to form around these areas. But we are manipulating lows and starting to leave highs, which is that accumulative behavior that we want to see. Dojang was asking Wyckoff. We need to know the terms of Wyckoff, like MentFX Trader Styles, or is it enough for us terms in the intro? Yes. Oh, okay. SEBCAR, the labels as far as Wyckoff goes. So personally, this is something, I'm glad you brought this up as far as Wyckoff. I do talk about it in the intro to SMC series, but something that I do see as well, and this is for someone trying to learn Wyckoff and get into Wyckoff, is to understand the behavior of the candlesticks and how they print. Meaning, if you're looking for an accumulation, so the manipulation of lows as we leave highs, like we had pointed out over here as well, we can see these relatively equal highs. So an area that retail had thought was resistance, right? The uninformed money had thought was resistance. So they're constantly shorting, putting their stop losses over these highs. And we see price come down, give them what they want, so they continue to stack orders to the downside. And the reasoning that they have their stop losses right here is why we get that structural shift to the upside after we break internal structure to the downside right here. So if we're looking for accumulative behavior, and when we're talking about Wyckoff, when I talk about behavior of the candlesticks, an easy way, a simple way to call an accumulation is to wait for the behavior, look for the manipulation of lows, look for a price to leave highs as well, and then look for that break of structure to the upside with impulse, that large move to the upside that shows, hey, price wants to break out to the upside. This is very obvious, right? And then after we have that break of structure to the upside, then we can wait for the double break to the upside, and then that shows that area of demand that we can look for to take price higher into areas of premium of then this swing move from this high to this low right here. That's one area we can look to take that as well. We can look for another break of structure to the upside with impulse that leaves an imbalance. We can see another one that occurred right here. Break of structure to the upside with impulse, very obvious, left that area of imbalance as well. This low to this high right here, strong low, weak high. Price came down into these areas, showed that accumulative behavior, meaning it's leaving highs, manipulating lows, and look at how lethargic it is. It isn't leaving these gaps like this that induce traders or show that displacement to the downside. It showed instead that displacement to the upside. And that's why we can look for those areas and try to catch the right trend instead of trying to catch the wrong trend overall as we are in an uptrend or a downtrend. That's just what I mean with Wyckoff, meaning we can wait for the break of structure to the upside to then understand that it's, yes, that's an accumulation. And then once you start to get deeper into Wyckoff and you start to see this accumulative behavior, you can start to see these breaks of structures to the upside right after liquidation rates to the downside. People would call this your possible spring, right? But I just look at this as a liquidity rate to the downside, area of fair value. Price comes into that area of fair value, and then we get the breaker structure to the upside, area of demand, and then it has that continuation to the upside. This is what you can look for as you start to get deeper into Wyckoff, but to keep it simple, and this is what I just recommend for all beginners, it's just to wait for the manipulation of the lows or the highs, and then wait for it to be very obvious that yes, price broke to the upside, or yes, this is a redistribution as we've been manipulating highs, leaving lows. We can see the lows right here. All those clean equal lows that we are leaving to the downside. And then we get that very obvious, right, move to the downside. We can wait for price to come up in there, show the confirmation of a move to the downside. We can see it switches to that lower high right there. And then we can look to take price to the downside. Maybe we can wait for more confirmation, right? Another breaker structure right here. Break to the downside, price comes up, makes a lower high, lower low. Displacement candle, very obvious right here. On that breaker structure to the downside, broke this low, broke this low, broke this low right here. Candle before, area of supply. And then you can take it to the downside. Now this is very obvious, right? We can see that displacement to the downside over those breaks of structures to the upside. So this move that came to the upside right here just created that lower high, took out some early shorts right here, and then made that move to the downside. Took out these longs right here. Now we're looking for the buy side liquidity. Took out the buy side liquidity, came up into an area of imbalance, broke structure to the downside, created more supply after it took out the buy side liquidity, and then continued to the downside after that. But we can wait for these very obvious show of hands that the market gives us from these areas like this: displacement to the downside, lower high, lower low, lower high, lower low. Very obvious displacement to the downside right there. And then you have your area that you can look to buy or sell off of after that occurs. But that's the reason I talk about behavior over those labels. Once you start to get into these, again, into Wyckoff deeper, and you want to throw on the labels, you 100% can. But I talk about this as well. It can easily become what we call pattern trading. And the reasoning I say this is because you can get into instances where with the redistribution, it's accumulation to then distribution, right? But in instances where you see price come down to these areas, and then you see an accumulation, and you say, okay, that's the spring, I'm going to take it to the upside, that's the reaccumulation, it should continue, right? And then you take a long, you get stopped out of your trade, and then you see price make this move to the upside. So you're like, oh, okay, I just called it wrong. This was the actual move to the upside, and then price came down, showed a redistribution, and then it made the spring to the upside right here. So I'm going to take a buy at this area, and then you get stopped out again, and then you see price make this move to the upside, and then you try to find an area over here to buy, and you're constantly stopped out. But then you look back and you say, oh, okay, price was still bearish, showed that bearish market structure, and then it came up, ran the highs right here, broke structure to the downside, and instead created areas of supply, and then respected that over and over again. Came up, created a lower high, continuation to the downside. So to keep it very simple, just focus on that market structure and then look for the manipulation of the highs and lows, and look for your first and second half for redistributions and reaccumulations, because that's going to be 80% of what you see when these markets are moving over 20%, which is those higher time frame reversals. Obviously, lower time frames are going to hold more reversals, but on the higher time frame scale, we're looking for 80% continuation, 20% reversals. So that was just a little one thing. Wait for manipulation, liquidity rate on our draw on liquidity or POIs, or so, leaving behind highs and lows. This means that it's better of us. Yes. So the reason I wait for the manipulation, and this is just from a logical perspective, something that we can make sense of through the markets. But what I mean by this is, you may have noticed, or you may not have noticed, or sometimes when you're looking at me markup charts, you may see that I usually only have 1 or 2 zones marked up instead of supply zone right here, demand zone right here, supply zone right here, demand zone right here, or all these different zones. And the reasoning for this, one, is I like to keep the charts cleaner, right? And two, is for the understanding that when we raid liquidity, either to the upside or to the downside, we create new demand or supply. Meaning, when we take old money out of the market, so we raid liquidity, so we take the old stop losses and old positions, we take those out of the market, then we introduce the new money, the new demand, and the new supply. So that's why I usually only have one area marked up for a price to come into. After I see the creation of it, we can see that price ran these highs right here, came back into an area of premium from this high that caused this low, and I'll go ahead and draw this out. Put that there. Came back into that area of premium and then broke structure to the downside with that obvious displacement, saying, yes, I want to go to the downside. So now, after we took out the early shorts, or the late shorts, sorry, that tried to get into trades right here, think about if they had their stop losses right here. Now they get stopped out of their trades. So they're saying, you know what? I'm gonna buy, right? Look at this candle to the upside. This is a 4-hour chart, mind you. Look at this large candle to the upside. I'm gonna go ahead and buy when it comes down into this zone right here. So they want to go ahead and buy. They place a demand zone right here. They're like, yes, when price comes into it, it's going to bounce off my zone and continue to the upside, create a higher low, right? And then what did they do? They put their stop losses wherever they're targeting. They put their stop loss below the lowest low, or below these lows right here, this low, this low, this low, and then eventually this low right here, back here, right? Because now they're saying, oh my goodness, I got stopped out of my trade. I'm going to go ahead and flip my bias now, and I'm going to take this to the upside. So now we can see right here that we have those equal lows that are very present. So we can see the early shorts are taken out. The late longs are trying to get into trades. They're now the fuel for price to continue to the downside from its overall bearish nature that it continued to show. So it can seem very tricky, but once you personally just try to understand that out with the old money, in with the new money type of mentality, then it can be a little bit more simple. So you just understand your premium and discount, look for those early shorts and those early longs to be taken out of their trades before you look to get into yours, and then you can go ahead and take it from there. But that was just a quick little Wyckoff understanding of behavior, why I personally look at behavior over labels, because one thing too is I personally got into that trading pattern mentality, meaning I would see what I thought was a distribution, right? I would look back, we can look over here and say, okay, manipulated highs. It had to move to the downside. There's an area of imbalance. I'm going to take shorts on this candle right here, right? And then I get stopped out of my trade. But instead, if I waited for that entire scheme, so price came down and then rated the highs and then showed displacement to the downside, then I could have looked for that short entry with the fuel that was created right here. But if we go back, we can see the equal highs that were formed right here. This low that had caused this high, price came down into this area and then broke structure to the upside on the 4-hour right here, and then came up, created a higher low, and continued from there. So instead of trying to call that, because I said, okay, this was the UTAT right here, and now I'm going to take price to the downside, I get stopped out of my trade, right? So that's personally one of the only reasons, 2 reasons really, why I focus on behavior over the labels for Wyckoff. But once you get very, very deep into it, then you will start to understand those. And we can get into labels eventually, but I just like to focus on those, and I think that's the most important for somebody who is trying to learn how the market moves in those ways. But let's get into now what we're talking about over here. So we were talking about price coming into these lows, into this 2-day fair value gap, waiting for a break of structure to the upside, price to show again that buy side liquidity, what we were looking for right here. So if price makes that move to the upside, creates those equal highs, then again we will know and understand that that is that fuel for that continuation to the upside, those stop losses, the manipulation of traders who are trying to continue to take this to the downside. Remember, if we show that impulsive break of structure to the upside with those imbalances as well. And I do want to go ahead and look at Bitcoin. I don't think we have reached our goal yet. We have not. Again, we were still waiting for those monthly lows, those 17,570 equal lows. This is the BTC USDT chart. I think this is Binance, the spot chart. But let's go ahead and talk about the behavior that had happened today. So something to point out with Bitcoin especially, and how you can start to get into these ranges and understand these ranges, and try to play these ranges, is understanding your, and this is personally what I look for, is the most external low to the most external high that created the range. So we can go ahead and draw this out from this low to this high right here. And then understand, again, this is from a Wyckoff perspective for the behavior, whether you're in premium or discount. So if you're looking right here, notice that we come back down to equilibrium, and then we hold that premium. So price makes that move to the upside, breaks structure right here, comes back down into that area of demand, shows that impulsive move to the upside, reaccumulates right here, and then continues into that area of premium again. But if we look back, we created a rally, base, rally. So if I'm drawing out my market structure, high, low, higher, high. Price comes up, makes a lower high, and then it makes a lower low. There's your M. So we broke structure to the downside right here. Where's your candle before? Your area of supply. Right here. So price came up into that area of supply, manipulated highs. So it was taking out highs, and then it left those lows in the form of trendline liquidity, and then broke structure to the downside right here, came back up into that area of supply after it rated the highs, meaning once it mitigated this area of supply and then broke structure to the downside right here, and then came back into this area of supply. This was that new supply for price to continue the order flow. So that's why I'll look or talk about how I only have one zone. So after price comes up into this zone, I'll look for the manipulation, which we can see here. Price takes out the highs. So anybody who had limits at this zone, early shorts, takes out the early shorts, breaks the break of structure to the downside, creates that new supply, and now you have that area that you can look to sell off of back into areas of discount. I was personally looking at this 1 hour fair value gap that we had created on this move to the upside, but I'm not too confident in this area again. Still am looking for delivery into the 17.5 lows for Bitcoin. We'll go ahead and take a look right here as well. We had this hourly move to the downside right here, came back up into the institutional candle, had a break of structure to the downside as well, had a drop base drop, came up into that area. We'll look at the M15. Yeah, it's not looking very bullish personally as far as what I want to see. We're still creating those lower highs, and we could look for a possible lower low for continuation, and then price to come back into an area of premium, and then continue to the into our 17.5 goal. But that was Bitcoin. We talked about ETH as well. Now I want to get into XAU. USD, what I'm looking for the week. And no problem, brother. No problem, Dojang. But looking at XAU, and this is something that was very interesting. I'm going to go ahead and throw on my path. I do believe it's on, yeah, this chart right here. But I am looking for a price to come back down into these lows, take out these lows right here, and we'll talk about why I'm looking for that. Overall, it's just simple market structure. Break structure to the downside with that impulse, came back up, created a lower high, another lower low right here, came back up, created a lower high, and then we can see internal breaks of structures to the downside, and then price came back up, created an internal high right here, and then created another low right here. So we could see still price come back up into these areas, take out these shorts right here, and then continue to the downside into these lows before we make that break of structure to the upside, filling again more of these areas of imbalance. We can look at this 12-hour area as well, this institutional candle that started this push right here. So now that we have the institutional candle, we're looking for price to come into that institutional candle, and then we'll look for a break of structure to the upside with impulse. I do like the way that we are starting to make a move into these areas. I'm going to get rid of all of these markers right here. But the reasoning I say that is all the highs that we are starting to leave. We are starting to maintain discount much more than we are premium coming down into these areas. So if we continue into these lows right here and the Wednesday to Thursday reversal that I'm looking for means price could come up into this area, accumulate, continue up into this area, this institutional candle that I have here at 1658. Continue its ride to the upside, make its move up to these highs, break structure to the downside after taking these highs out right here. We can throw on these sessions, and I will go ahead and do that right now. We can wait for Tokyo, see what Tokyo does. I personally always look for NY to get into these trades, and we'll talk about why as well. The reasoning that it's so important to me, why I look for NY, and instances where I don't look for NY is instances that I can be manipulated out of trades. Meaning, if I don't find the right highs or the right lows that I'm looking for, then I can't find that continuation. I end up getting stopped out of trades, right? And then you start to get frustrated, start to flip bias when you go back and look and say, oh, never mind. It actually showed exactly what I wanted it to see. I would just needed that patience, right? And we'll talk about exactly what I mean by that. But when I talk about NY, I follow ICT kill zone. So 8 in the morning to 11 a.m. in the morning, NY time. And the reason I got to talk about this is because that is when we have news drops, meaning that's when there's more liquidity into the market. That's when there's going to be manipulation of the higher entity, right? The quote unquote composite operator. So we can look for those times to then look for those setups, meaning if you notice, and this is on the bottom right here, all of these indicators, so these lines that I have on the bottom show ICT kill zones, meaning the blue is New York, and then the green is London close, the black is Tokyo, and then the red is London. So if you notice during these times, and this is just moving my mouse along as we move, right? If we're just looking at all of these entries that I have presented right here on the left side of the screen, if you look on the bottom of the screen as I start to drag my mouse over, you notice that they fall during these kill zones. So if you're looking, you can see no trade, kill zone, trade available, no trade, wait for the kill zone, trade available during the kill zone, no trade, kill zone hits, trade available, continue. There are some instances where you won't, or you can still have trades out of kill zones. I'm not saying you can always trade these kill zones, but why it's so into me is because now I have these set times, right, from 8 in the morning to 10 in the morning, 11 in the morning, that I can look to trade. And now I've created it as a job, right? So now I'm only working 3 hours a day, and then I can go look to work another job, right? Go to other hobbies, take care of myself for the rest of the day, go to work out, just try to work on myself, try to read, right? Or look to back test. But the point of that is now I'm using, and this is personally what I look for in trading, is that time freedom, meaning time is money, right? We all believe that money brings us freedom, and it can allow us to bring us that freedom, right? If to express ourselves, right? Get what we want in life, but with the ability to come to the charts every single day at the same time, whether you're London based, whether you're Asia based, whether you're New York based, right? USA, then that now gives you that job like mentality. So now you can come to the charts at the same time, look for the same setups, meaning come to the charts at 8 o'clock, look for the liquidity rate at 8:30, and then wait for the break of structure and have your area of supply or demand. And then you can look on your daily chart, right? Always top down analysis, find your draw on liquidity, your weekly chart as well. And then you can look to trade up into those areas or down below into those areas of buy side or sell side liquidity. So you can start to keep it simple, start to look for the same things over and over again. And just now you're starting to follow that trend. Meaning if you're constantly in a downtrend, then constantly look for shorts. You'll start to get into instances where you can find those counter trend areas after raids to the downside, and then back up into areas of supply, lower low. Break a structure to the upside after this raid to the downside, back up into an area of supply, lower low. Lower time frame break a structure, back up into an area of supply, lower low. Right to the downside, right? We can start to see these same type of behaviors over and over again on these charts as they start to come to play. But when you're starting out with these institutional concepts and trying to follow market structure, supply and demand, and Wyckoff, then just honestly always follow your higher time frame market structure. Meaning if you see that 4-hour break of structure to the downside with displacement, constantly look to short, look to short. Look to short as it comes back into areas of supply. Look to short, right? And you'll still have very, very valuable trades over and over again, continuing and starting to short, right? And then once you're disproved, so you have supply, 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 and then you get that break of structure with impulse, meaning your supply is ran through, and you leave back an area of imbalance, then you now have that available area to take a long off of, right? If my supply was taken out, then I now have that area to look for, that new demand, to then take a long into higher time frame areas of supply, right? We can look back. But the whole point of that is if you're constantly on the right side of the market, then once you are wrong, and because we look to confirm them anyway, then your idea is wrong, your narrative is wrong. So put back your ego and say, okay, now it's switched. I'm looking for price to confirm that. And once it confirms that, then you can then take that trade to the upside. And you don't have to be right on price continuing to the downside at this area of supply, right? Because you're not right, you're profitable. That's what is so important about these concepts, is the fact that you don't have to be right to be profitable. You can continue to study and learn. And once you do, you'll start to see how this behavior just happens over and over and over again. And then you're starting to get into the routine type of mindset, where you're looking for the same type of behavior over and over again. And then it gets into a repetitive pattern-like process, right? And now you're getting paid every single day just doing the same thing over and over and over again for 2 hours a day. And then you're going to do whatever you want to do and you're walking away, right? That's the beauty of what trading can accomplish for you. But if we just take that time to really, really, really study, really work for it, then we can start to get that and start to make that work for us, start to achieve our goals and achieve what we want through trading. But the 90%, and this is something I heard from MentFX, heard from a ton of mentors, right? But there is simply no shortcuts. That 90% of traders try to be profitable in this game, but they try to find the shortcut. They want that get rich quick scheme, right? So they're trying to find those profitable methods, hey, look at this guy over here, right? He made X amount of money in a month. Maybe I can do that too with these triangles or with this certain strategy. Not knocking any strategies, right? Just saying that certain propaganda, right, and certain advertisements that you see out there can give you that mentality of the 90% that are unprofitable, which is why it's so dangerous and why it's so interesting to see how the markets move based off of that psychological behavior, right? That psychological understanding that, oh, well, there is that 10% that's against the 90% that is wrong, right? So if they're always going to the 90% stop losses and they're having the larger moves, if I can start to follow them, then maybe I can be profitable, right? This is what I was looking at from my terms. But don't get me wrong, and I talk about this almost every stream as well too. If you have a strategy that works for you, that is consistent, that is comfortable, that you're only on the charts for limited amounts of times, you're limiting yourself to the amount of trades you take, the amount of days you trade, you have a goal, you're journaling. If you are doing all of those things, then I'm not going to knock your style. And you trade triangles, or you trade EMAs, or you trade whatever type of strategy you have, right? That is indifferent to this one. I'm not going to knock your style at all. Why would I change a profitable strategy? So this is just how I look at it from an institutional perspective. The composite operator versus the retail traders, right? The uninformed money. But if you have something that works for you, continue to use it. But with XAU, this is what I was looking for. Not this necessarily. I want price to continue. I say want, but again, we still have to react. I talked about price coming up into this area, creating that high, and then continuing into this low right here. And then I was looking for a lower low to be made. So actually these lows right here as well. And I'll go ahead and throw on the 4-hour chart. But if we look back right here, and I'm going to hide some of this just so we can see what we're looking at. But we can see this move to the downside right here. Price came back up into that lower high, made a lower low, another lower high, and we don't have a lower low right here. So if we create a higher high right here with impulse, then I'll look for a re-accumulation within this area to take price higher into this weak high. But overall, again, I'm still looking for price to come lower. We can see some liquidity that we're starting to build as well. So maybe we take out some internal highs, mitigate this area of supply, and then continue to the downside into these lows right here, taking out all of these lows, and then breaking structure on the hourly. And then we'll get that higher low for the continuation overall. This is going to be one of the swings that I've been waiting on since we had this impulse right here back in September. So almost a month now. Yeah, I think we have like 3-4 more days until it's a month that I've been waiting on this. But if price shows that behavior that we're looking for, we can see all the highs that we're starting to leave behind too, and we continue to manipulate lows and then break structure again with impulse, showing those areas of imbalance. Then we can look to take those trades to the upside off an area of demand into this weak high right here, higher into higher time frame supply from our daily, break a structure to the downside that we had right here. We can look on the weekly chart. Weekly institutional candle came up, created a lower high, continued to the downside. It's also within premium. It would also be taking out all of these highs right here, getting a lot of people into longs as they look at it as a breakout to the upside, right? They see price come up, breakout to the upside, mitigate supply, and then continue to the downside as they try to buy that retest, right? Or it could reaccumulate, continue to the upside. This is obviously the weekly chart. Can't call it out of time right now, but this is that draw I am looking for if the 4-hour chart can show exactly what we were talking about within these areas right here. So that was XAU. Tomorrow specifically, and I'm going to go ahead and go to a lower time frame. We'll get rid of that. Let's go ahead and throw this out. Also, too, we have about 10 to 15 minutes. I'm going to go ahead and look at US 30 after this, but if anyone has any charts that they want me to go ahead and take a look at, then I'll go ahead and do that as well. We will definitely have the time after I look at US 30 to take a look at your guys' charts if you have any charts. Again, you can at me anywhere, stream chat, crypto chat, FX chat, wherever you guys feel. But we'll go ahead and take a look at this behavior right here. So we were talking about price to come back into this area of supply from this high that caused this slope right here at 1658, roughly 1659 flat. 1660 is a psychological number as well, something that a friend of mine had pointed out to me. Obviously, our 10s are going to hold psychological numbers, especially for gold. She loves to manipulate psychological numbers. If you notice, this is something that he had said. Again, I'm going to go ahead and backtest this more, but he said a lot of $10 ranges. So you'll see price likes to manipulate the $10 ranges. We can see manipulation at 1650, manipulation around 1640, right? Manipulation around 1670. We saw it all right here as well. Again, back to 1650, manipulation at 1660, right? It loves these $10 ranges, something I've started to notice. Dojang said anchor and reef short side. Yes, I will go ahead and take a look at that on stream for you. But something that gold likes to do a lot, and we just talked about that, was those $10 ranges. But within this area, we could definitely possibly see price either one, take out these highs right here, break structure to the downside, and then have that move into these lows, or two, come into this area of supply, take out these highs right here, and then make that move to the downside, or three, take out all of these highs within this range, either distribute right here, or show impulsive breaks of structures on this move to the upside right here. And then we will look again, like I was talking about, for that reaccumulation to then take price higher into this week high right here as this low caused this high. And then if we come down and create demand, then that high could easily be taken out as it shows and puts in that higher low. So we'll get rid of all of that. So there was XAU. I'm going to go ahead and take a look at US 30 now. Talk about what we're looking for the week. And then I'm going to go ahead and post all of these as well within either lessons or within FX Idea. What I'm looking for coming into the week. We're probably going to start to do that pretty much every week, almost every day. The outlooks, I'll start to post my outlooks, what I'm looking for, and then you guys can start to follow the frames, the narratives as they're coming into play, and then obviously entries and exits as well once we get up to those areas. But US 30, something that had interested me. Daily chart, this high to this low right here. Why am I calling this high? Because this was the most previous high that had rated liquidity and then broke structure to the downside. So this is where supply was introduced. So I can see price coming up, continuing, meaning reaccumulating within these areas, continuing to the upside into this area of imbalance, mitigating this area of supply, making that move to the downside, inputting in some buy side liquidity, as we can see right here. People will start to see this as that possible flag. Maybe they're starting to buy right now. They think it's a breakout to the upside. This is what it will give them, and then it mitigates that area and then continues to the downside into these lows, mitigates the weekly institutional candle I've been looking at over here within discount, and then makes that final move to the upside that we were looking for. Again, this could start to happen right now, meaning we just saw a daily move once, a daily move twice. We could reaccumulate within these areas right here and then start our higher time frame move to the upside. Or like we were talking about right here, we could just reaccumulate right here, continue to the upside into these areas, and then distribute. So we'll watch this area as we come back into premium, but as you can see, we're starting to get back into equilibrium, so we could definitely see some choppiness I'm going to go ahead and go on the 4-hour chart. We're already starting to get some choppiness coming into this area right here, but we're still holding bullish structure overall. There's no downside displacement, so I'm not going to be looking for any types of shorts on US 30 quite yet. We can see another break of structure, area of demand. Price could continue into this area, this weak high right here, and then start to just make its move to the upside from there. But I would look for price to come into these areas of imbalance, take out these early shorts back here, introduce new supply, and then look to take price to the downside after that is shown. But that is US 30. Dojang was talking about Anchor and Reef. Those are two I'm going to go ahead and look at. Anchor. Here we go. Oh yeah, I remember Anchor. She loves these pumps, man. Loves to do this. Loves to show this behavior. So, Anchor's interesting. We go on the daily. Actually, we'll start with the weekly for Anchor. Okay, so we had a little rally-based rally right here. Price moved to the upside. Took out these lows right here. We could have a possible distribution to accumulation. Price could be starting to make its move to the upside, up into these areas of premium, then possibly reaccumulate and start to continue higher. This could definitely be seen. Again, this is a weekly chart, and crypto isn't very liquid right now. I don't know the specifics on this coin itself as far as how it is doing in the world or anything like that. But from the chart perspective, it actually does not look too bad. This weekly chart, and the reason why I say this is because we created a new high right here and then came down, and as you can see, we have a weekly high right here, a weekly low, and then this move to the upside. So if this weekly closes and leaves this imbalance behind, then we can check the daily. Or at this point, actually, I would watch the 4-hour for price to come back into these areas and then break structure to the upside back into this 0.02826 or just before, meaning if it closes, creates another candle, and then creates that fair value gap, then I would look for those areas. So we can see this 4-hour for value gap as well. So you could say 30 to 28 as far as what I would look for upside. But it does look like continued upside. Now again, with these coins, something I do want to point out as well. And we'll look at a 2-day chart. Now it does look bullish if we can get a closure, and then we can start to see the slow lethargicness back into areas of demand, and then those breaks of structures to the upside with impulse. That's when I'll be looking and studying the most for these coins. But Anchor does not look too bad. Reef, I think Reef had a pump. Someone was talking about that. I'm not too sure. Take a look here. Yeah, it's up 10%. Yeah, okay, Reef looked good. This was nice. Okay, we'll talk about how this happened. Price came down, made this low, broke structure to the upside right here. Institutional candle right here, created the higher low. Look for the daily break. Came down, broke to the upside right here. Daily value gap. We'll draw it out right here. Now this one has, from how it is right now, looks like it's completely in continuation mode. If you want to look for some lower time frame entries, I would personally, looking at this wick right here, I would look for price to just honestly, is this a higher time frame or lower time frame wick? Just a lower time frame wick, okay. Right now 4 hours still bullish, so I would still see continuation to the upside. I wouldn't see anything differently personally happening. On higher time frames, it looks like it's starting to deliver into this area of supply. So on the weekly chart, this 0.8513 area, definitely an area to watch for possible shorts into possible longs for continuation to the upside. But this is a weekly scale. We can even look at the monthly. overall, it could just be mitigating this area of supply and then continuing down into these lows right here. We'll have to watch the daily structure as we come into these areas. But right now, it does look like it's in continuation mode, and it's just going to continue up from here. But that's pretty much what I had for you. I hope that did help you out. I am going to post what we were talking about earlier today, US 30, ETH, and XAU USD. And I start to want to post daily outlooks for you guys as well for XAU every single morning when I'm waking up. But once that happens, once we get into that, we'll start to be able to follow those narratives much easier from what we talk about and then bringing it into the market once we are live. So that was pretty much all I had for you guys today as far as the sentiments. Again, I was going to post these so you guys can look back on those and start to see those narratives as they come into play. But gold starting to have that tighten up, right? The winding up, where you can just basically start to see that it's creating that liquidity both sides. So we can look for the manipulation and then again look for the breaks of structures. Gold is going to be the heaviest one that I'm going to be watching. Coming into Wednesday, coming into Thursday for our midweek reversal. You're welcome, Dojang. You're welcome, Dong. I can go ahead and take a peep at oil. Yes, sir. Actually, let's throw this up. I'll throw it up on this one. Oh, we got to get it off the 4x one. We'll go ahead and take a look here. So on our higher time frames, and oil was a good one. I had an old chart of this actually. This institutional candle right here, I was looking for price to show this behavior and then continue down into these lows right here. But overall on the weekly chart, definitely still looks to be bearish. We just took out this weekly buy side liquidity that we can see right here, mitigated this area of supply. Now we had one breaking structure to the downside, second right here, made our move to the downside. We'll look on the daily chart. Daily had a break here. I can see what possible demand zone you are talking about right here for price to continue to the upside. But overall, I would look for downside continuation. Possibly price uses this area of demand to come back into this area of supply, meaning it takes out these highs, comes back into this area or mitigates the institutional candle, and then shows that break, and then you can look for price to take it right there. But overall, I would say on our higher time frame chart, and I mean we can look at the monthly even, that we could definitely still be showing that bullish behavior. But if you notice, we didn't really have strong closures over this right here, so we could start to see some downside movement, but I would still look for a price to deliver higher into these imbalances on the daily chart. In the 4-hour chart, if it starts to show those breaks of structures to the downside, we'll just have to see within this area if we maintain premium or discount. So you can go ahead and draw it out like this. This is how I would draw it out. But we are in OTE as well within this demand zone. So I would definitely watch the 4-hour chart for a high, low, break of structure to the upside, maybe even fill in this gap right here. Takes out some sell side liquidity and then makes that move to the upside. And then I would look for delivery into this buy side liquidity. And then depending on if you get that strong close or you get a break of structure to the downside, you can look for delivery into these highs. And then higher time frame, we can look at the weekly and the monthly again. Yeah, into these areas of supply. Taking out this buy side liquidity right here, possibly a higher time frame accumulation to distribution following a weekly distribution. That's what would personally make the most sense to myself. But I do like this area to look for possible buys. I would just look for that 4-hour shift MILF. So that's what I'm looking at. That's what I'm looking for. It is around 8 now, so I'm going to go ahead and end this, but I do appreciate everybody who is here, everybody who is listening in and trying to get that understanding of what we're looking at for the week, as well as those Wyckoff tips, trying to understand the charts more from the institutional perspective. That's why I get on here every Tuesday, every Thursday, and try to show you guys, right, from my view, how I'm looking at the charts from the composite operator view, how the manipulation occurs, right, how it is shown, how it is given, and how we can look to capitalize upon that. So like I talk about every stream, if you guys are here, it's already showing that dedication, already showing that you want to be better than that 90%. You want to be that 10%. So I applaud you guys for that. I appreciate you guys again, and I hope you have a great rest of your day or night. This will be posted as well. Peace out, you guys. I will catch you later. And again, these will be posted.